Hey, it's me, Dahlia again, and today I wanted to share with you about oh my goodness, reverse mortgages. So, I wanted to take some time to explain to you what is a reverse mortgage and explain to you that it could be a financial tool for people who are possibly thinking of retirement or want to think about ways you could use real estate in your financial planning for your retirement. So a lot of people think of ways to get cash from your home, and they usually think about a home equity loan. So basically, like they do a can refinance and get cash for the house. Another thing is people go and think they want to get an equity line of credit. So equity lines of credit are great because you can't take money out of your house. You have to keep the loan value to attached to the house only up to 80% of the house can be financed. That means you have to leave 20% in equity. Now, the thing about HELOCs is that they are tied to income, and there's income ratios that need to be there in order for you to qualify, and it has to be paid back. You could have a HELOC where you only pay the interest for a few times, but for a specific term. But the point is to pay back that HELOC. And if there's a default, then the house is taken, of course. And then it takes a second position on your title. So you keep your first mortgage, and then you have your HELOC. The cash out refinance, you would have to refinance the entire amount, which is also tied to your income, and that you have to show 2 years work history, credit, etc. And again, you can only borrow up to 80% of the equity of your home. So I wanted to talk to you guys about what is a reverse mortgage, when it would be a good thing, and when it would not be a good thing, or how you could use a reverse mortgage to supplement your retirement, and different options available. So, first off, to have a reverse mortgage, you have to be 62 years old, and you have to live in the house for at least 6 months and 1 day. So, it needs to be your primary residence. It cannot be a vacation home, or Airbnb rental, a house that you rent out. No, that's not allowed. And if FHA finds out, or the bank, whoever finds out, and you are reported, the people living in the residence will be summoned to get out of the house, which is why there's been some stories of people getting kicked out with reverse mortgages. Usually, this is the case when people aren't using the house as their primary residence. Also, it's important to note that back in 2010, and there's a lot of stuff going on, but this program now, the reverse mortgage, is a FHA insured program, which means a few things. Number one, in order to use this program, the house has to pass FHA financing rules. It has to be in a habitable condition. It can't have broken windows, rotten roof, lots of termites. It has to be able to pass a FHA inspection appraiser. Okay. This type of loan, it is a non-recourse loan, which means it doesn't have to be paid back while you're alive. If you take out the money, you could keep the money, use the money. You don't have to pay back. The the house will be called when the borrowers on the title, um, pass away and are no longer living on the property, or they decide to sell before that. If they decide to sell before they pass away, that's when the loan would be called due. Another thing to notice is that the title remains in the name of the borrower. Some people have this connotation about reverse mortgage that there's a lot of scam stuff that has happened. Now it's a FHA product, and they're very strict about like the condition of the home, and that you are living in the home if it's your primary residence. And additionally, there is insurance provided for the heirs, so that basically there is no payment made on the mortgage. The person living in the house has a few options. They can either borrow money from the house, they could get a lump sum, they could get a term where they decide to get payments every single month from the house, and that's added to the mortgage. Or they can either decide just not to have a house payment. They just don't want to have a house payment. They live in that house and they intend to live in that house until they, pass away. So that's a little bit of the reverse mortgage. Another important thing to qualify is that not everybody can qualify. You have to be able to have 40% equity in the home. So that means that if a house, you can't you can't borrow more than 40% of what the house is worth when you initiate the loan. Okay. And a lot of people say, hey, is this a good idea, bad idea? Will I leave this for my children? What happens is when the house is sold, the mortgage will be paid off first, and whatever is left over will be given to the heirs. If it comes to a situation where there is more owed on the property than the house is worth, what will happen is that the FHA will come to ensure that. And if any of you are interested in this product, I really think you can come to me and I could refer you to a few lenders that offer this product. It'd be great if you talk to someone that is an expert in the loan side on this product, because there are a lot of nuances that you could benefit to you and curtail to you. And if you have a retirement planner, you could also talk to them about this if it's a good idea for you in your retirement planning. And basically, um, oh, there's another way. So there's a lump sum, you get payments in the term, or you could simply decide that you don't need to get the money, but you could get the money on an as needed basis. So and you could combine all these depending on the product you decide to use. So I think it's a great product for people that are in their retirement age and they know they're not going to be moving around and they want to stay in a particular area. Um, I think that would be a great tool, and it's a financial asset for a person in that situation where they don't want to have the mortgage payments, and then not necessarily just this is one avenue and it's a tool and it's available to you. So I just wanted to share that with you. I'm not a financial planner, but I did want to share that there is tools out there that could help people besides a typical cash out refi and a HELOC. And that's what I did want to share with you guys. So if you have parents that are hitting retirement, or you know someone in this is an avenue for them. Okay. So if any of you have any questions about reverse mortgages, or you want to get in contact with someone that deals with this, please let me know. Send me, my phone number is 323-496-6894, and I will be here to answer your questions and refer you to a loan expert who could give you more details if your home qualifies, or if you have the 40% loan to value ratio so that you could come into this type of loan. We could talk about that as well. Or let's say there's one person in the house that's 62 but the other one isn't, can we qualify? So we could go into your specific scenarios. So I'm here and I wanted to share that with you. And if you have anything else related to real estate, please be sure to reach out. And I hope you all have a great day.